There is no doubt that the passion surrounding AMC stock is real. And look, it comes out in the comments. I read the comments on my channel, I read the comments on other channels, and I know there are people on both sides of the vote. When it comes to voting yes on the issuance of 500 million new shares, and when it comes to voting no on the issuance of 500 million new shares, there's a place for discussion, yes, but guys, we cannot forget why we are here. We are here to trigger a short squeeze. We are here to watch the hedge funds lose out on their investments and lose their money in a margin call. Now look guys, we cannot do this if we are divided. If we are separated, we cannot trigger a short squeeze. So in this video, let's talk about a couple things. One, we're going to talk about dilution and specifically smart dilution because it was brought up. You know, the CEO of AMC said that there's a such thing as smart dilution. He's no dummy, he's no fool, and AMC is no dummy and no fool. It would never flood the market. Okay. But it's still dilution. And then we're also going to be talking about short sellers attacking stocks and what this means not only for the stock price of AMC, but for AMC as a company. So if this sounds like something you're interested in, let's get started. What's up everybody, I'm Clay. I'm here to make 2021 the best year ever. If you haven't clicked that subscribe button yet, make sure to subscribe to the channel. Join us, become a bro. We're here every single day and we're growing our portfolios together. All right, let's jump right into it. Let's just get started because I don't like making long videos. I want to keep it around 10 minutes, 12 minutes or whatever. So let's jump right into AMC stock and dilution, specifically smart dilution. So dilution occurs when new shares enter the market. Now we know that AMC currently has around 43 million shares at its disposal that it can issue at any time, right? And they believe that this is enough to get them through 2021. Now they want to issue an additional 500 million new shares following 2021. So they wouldn't do this until after the 2021 calendar year. And this settled and eased a lot of minds because look, a lot of people out there think that a short squeeze has to happen in the short term and that hedge funds that they don't have the means to hold out until 2022. But in all actuality, they can hold out as long as they want. Guys, hedge funds, it's not like they have a set amount of money. They can go borrow more money. If they see a light at the end of the tunnel, people are going to be willing to loan them money because let's face it, banks, if the hedge funds lose, the banks lose too. The banks don't want to lose their money. So they'll say, okay, well, we'll lend you some more money. We see the light at the end of the tunnel too. Let's avert this risk and move on. And, that's what it's going to be. So we need to stay strong. We need to stay together. And we need to know that if we do that, we can trigger a short squeeze. Okay, now if we were to introduce 500 million new shares into the market at the same time, yes, this would flood the market. It would destroy the price of AMC just as a short squeeze would do. Now we know that they're not going to do this, but with 500 million shares at their disposal, every time the price of AMC goes up, they could issue more shares. If AMC is trading, 30 times the industry average, think about it. That's essentially saying that AMC can go out and say, well, yeah, here's one of my dollars. I can go out and buy 30 new dollars if I just issue this share because it's trading at 30 times the industry average, right? That's smart dilution. AMC is raising a lot more money. They're buying cheap money when the stock price is inflated. And as soon as a short squeeze starts to trigger, they would go out and they would issue new shares. Now, it doesn't matter what you hear from who you hear it from. It makes sense to issue these new shares when the stock price is inflated. Think about it. If I were to say, here, man, I'll trade you this $50 bill for your $1 bill, you're going to trade that with me, right? All day long. You're going to take my 50 if I take your 1. All day long, it makes sense. So know that moving forward, that's smart dilution and it will occur and it will stifle any idea or any notion of a short squeeze because there will always be new shares entering into the market. Now also, you have to keep in mind that of these 500 million new shares, how many are going to be allocated towards CEO and executive compensation at AMC? Do you think that they're just going to be okay with the current $20 million that they have on hand for their executives and for their AMC or for their CEO? No. There's going to be a portion of that $500 million that goes directly into the pockets of the CEO. There's going to be a portion of that $500 million that goes directly into the pockets of these executives. So of course they would want you guys, and they would want me, they want the shareholders to allow them to issue these new shares because it's money directly in their pocket. So that's a little bit about smart dilution, and it might counteract if they do it in wise ways. You know, they talked about paying down debt at a discount, paying off rent at a discount, acquiring new competition with these new issuance of these shares. So yeah, it could be okay in the long run, but look, wouldn't it be nice if I paid your rent for you? Wouldn't it be nice if your buddy came over and paid down all your debt for you? Of course it would be nice. But it would be a lot nicer if AMC goes out, they use the money that they earn to pay down their debt. If AMC goes out and use the money that they earn to pay down their rent. And if they use the money that they earn to acquire competition. That's what business is, guys. You go out, you have your IPO, you issue your shares in an initial public offering. That's when you raise the capital, and then you grow that capital through a sustainable business. Now, we know that AMC is in a hard place right now. If you look at their debt to asset ratio, it's around 128%. This means for every dollar in assets they have, they owe $1.28. So what does that mean for the book value of all of our shares? All of the equity in the company is in the negative. So essentially, all of the current shareholders are bankrolling the assets that AMC owns. Okay, we're in the negative. As shareholders, our book value is in the negative. We essentially own AMC's debt at this point. We own zero assets when we're invested in AMC. This makes it a very speculative trade. Now, there's a lot of people in the comments that believe that AMC is not overvalued based on its fundamentals. Guys, when all we own is debt in the company, when the equity is negative, think about the fundamentals on that trade right there. AMC is a speculative trade right now. It is a trade that is initiated to trigger a short squeeze. If you want to see the stock price of AMC go up, and if you want to see it go to the moon, you need to believe that a short squeeze is going to happen. Plain and simple. If you're a fundamental or long-term price appreciation investor, AMC has got a long way to go. But if you're a speculative investor investing in a short squeeze because you want to see the hedge funds lose out, you're in the right place because it can absolutely happen. Now, it's been mentioned by the CEO, it has been mentioned for AMC that there's short seller pressure right now. And I believe the headlines was that the CEO claims that short sellers are attacking the stock price of AMC. Let's briefly touch on this, okay? Because there might be some misconceptions here. Short sellers can short the price of the stock all the way down to zero, okay? I don't care if it goes to 0.00001 per share. How does this affect AMC as a company, okay? It does not and will not affect the day-to-day running of AMC as a company. If the stock price is zero, AMC still moves on. It doesn't affect their revenue. It doesn't affect their debt. It doesn't affect their costs. It doesn't affect their earnings per share. It does not affect any of this. What does it affect? It affects the issuance of new shares. If AMC wanted to go out and raise money and their stock price was a penny, okay, they cannot raise very much money unless they issue a ton of shares when it's a penny per share. If they want to go out and offer their executives, if they want to go out and offer their CEO stock compensation, equity compensation packages, those packages are essentially worthless if the stock price is zero. Think about it. If the CEO stands to earn 1 million shares at the end of the year, now a lot of CEOs, you can look at them, they take $1 in compensation, and then all of their earnings come from equity compensation, right? Let's just say that that's the case, and the CEO stands to earn 1 million shares at the end of the year. At a $10 stock price, awesome. He's going to get a $10 million compensation package. At a penny, what's he walk away with? $10,000? That is the only thing that a stock's price affects when it comes to the company. It does not affect the company in any other way than issuing additional shares. The stock could be trading at 0.00001 and AMC could go on and they could earn billions of dollars a year and their stock price would have no effect on the day-to-day running of AMC unless they go to issue additional shares, which either one, they issue to pay down debt, they issued all of the things that he was talking about with smart dilution, or two, they put directly in the executives' pockets, right, through executive compensation packages. So keep that in mind when you're allowing AMC to go forth and issue these additional shares. Now let's talk about the vote real quick. Let's bring it all together because look, there was a vote. They issued all of these new shares. I believe it was 2013. The CEO kept mentioning that in 2013 they issued all of these new shares. You know, they voted, said, yes, we can issue these shares. And it was year after year after year that they went and didn't issue any new shares. Well, look, at the end of 2020, they needed to issue shares to avoid bankruptcy. And he made a good point. This is smart dilution because investors were stuck with two choices. One, bankrupt the company. Not because short sellers were selling it, not because the stock price was affecting the company, no, but because the day-to-day running of AMC, which was closed because of the pandemic. You know, I can't help it, the external factors that were coming down on the company. But AMC issued these new shares to avoid bankruptcy. And that is what investors had to choose from. Go to zero because the company can no longer be ran, or raise some new money and put down the road what's almost inevitable, right? Now, I'm not saying that we can't survive as a company, but let's think about this for 2 seconds. If you vote no and they cannot issue these shares, what are we facing? We're not facing bankruptcy. We're facing rising revenues. We're facing an opening industry. Things are opening back up for movie theaters. The movie theater can take care of itself. They can use its revenue. They can use all of its earnings to pay down debt and to pay down deferred rent. Guys, it's not the time to go out and acquire new businesses right now. It's not the time for AMC to go out and acquire Cinemark. It's the time for AMC to pay off its debt, right? Now, here's how they want to pay off their debt. They don't want to go out. They don't want to increase revenue and decrease costs. They want to ask other people for money. They want to ask other retail investors for money. They want to go out there and say, look, we know that our debt to asset ratio is 128%. Would you please give us some money to pay off our debt? Now, this could be a good thing for you because you might be thinking, well, shoot, you know, my book value is negative right now. Yeah, that's right. Why don't we bring some other guys in here? And if they give us all this money, if they buy into AMC too, we can pay down our debt. But you dilute your shares, okay? It could be a good thing for AMC, but here's a better thing. And this is the analogy that I'm going to end it on, right? If you're going out there and you find yourself in over your head, let's say you owe on your credit card, you owe on your house, you owe on all that, and you owe more than it's worth. Now you've got two options. You can work hard, you can get more efficient, you can look at your budget, you can increase your income and decrease your outflow, right? And run yourself efficiently and pay down that debt. Or you can say, hey mom, I need some money. Hey dad, I need some money. Hey friend, I need some money. Could you guys just give me this money so that I can get myself out of the situation that I got myself into? That's essentially what AMC is asking for in this vote. I 100% believe that AMC can survive as a company. Okay, I believe that revenues are rising. I believe that it's a long path. I do, but I believe that it's the right path. It's efficiency, and it's what they need to do to survive in the long term. They don't need me to pay off their debt. They don't need you to pay off their debt. They need to pay off the debt by running the business, right? Now, that is what I believe. If you believe differently, let us know down in the comments below. Please keep it clean, guys. If I vote, look, I'm voting no. I believe that the company should run itself and that they shouldn't keep, asking for a GoFundMe account to be set up for them to bail them out, right? That's what I believe. If you believe differently, you can let us know in the comments down below, but I'm not a clown for voting no, and you're not a clown for voting yes, right? You've got different opinions than I do. That's okay. But look, the last thing I'm going to say before we end it, we are in this together. We are in this for a short squeeze, and you need to remember that moving forward. AMC is not a fundamental value play. AMC is a speculative short squeeze play to bleed the hedge funds dry. So I hope you remember that, and whether you vote yes or no, guys, we are in this together. We are bros. We are apes. We are here to take the hedge funds down. I'm excited about it. I hope you're excited about it. So let us know down there below what you're voting, what you think. And guys, at the end of the day, we're all friends here, right? So just keep it clean and be mature about everything. And if you like the content on the channel, don't forget to click that like button. Guys, Webull down below. Sign up for Webull. Use that link, deposit $100. Get some free stocks just for doing so. And please, share this video. Share it somewhere. I mean, somebody's got to hear what's going on here. And the best way that you can do that is to just share this video somewhere and let somebody know what's actually going on. And if you do that, tag me anywhere at Claybro or Claybro883. I would love to follow you guys back and see what everybody's interested in investing in. Now, until the next time, I hope that each and every one of you have an awesome day.